Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having an amazing day. Happy Tuesday to you and your family. We're taking a look, of course, here at Bitcoin, seeing what's going on. Kind of looking at a few things, of course. Fed meeting of being kind of one of those, as far as historical data and how the price action has changed or adjusted as a result of those Fed meetings. Then also obviously look at traditional markets and Bitcoin itself. But if you're new to the channel, not a financial advisor here, I love teaching people to trade. I hope you can learn something today. Of course, my passion is to help you become a better trader. So if you'd like that for yourself, CryptoCache.tech is a website. Link in the description below. We can go ahead and help you get on the right track. We have a trading community, academy, as well as a signal group, right? So basically I send out signals for every single trade that I take. We just hit 103% for a 20x leverage position for a short on the way down. We still have one more target to go. I think we might actually even hit that, honestly. So, at this point though, what I'm getting at is if you are struggling in this environment, please, of course, attend my trading academy, become a better trader, and make sure you work on your mind and your body in addition to your trading. Okay, those all kind of go together, and those are things I like to kind of teach and reiterate. Anyways, so taking a look here, of course, at Bitcoin, let's go ahead and start with some obvious stuff here. Just kind of reiterate the obvious here. We're back underneath the 50-day set moving average. So remember when I said roughly a week ago that if and when the price action breaks above the 50-day SMA, we want to wait at least a week, maybe even two, to get full-on confirmation that it's staying above. Well, it rode the lightning for about 4 or 5 days and completely lost that yesterday and today. So the likelihood of it staying under the 50-day SMA for the moment is fairly high. So I would say long positions right now are ill-advised, at least until we can come down to bounce off a key level support such as 20,000 or 19,800. Those are areas that we need to kind of pay attention to, because once again, we do still have this ascending type of trend, and that should be an inception point there at about 20,000 or 19,800 if and when the price action comes down that low. It does feel like it wants to continue to progress down to test 20,000. If it does, that's perfectly fine. We could and should likely see a bounce with another potential increase like we saw here of 20-30%. But again, until we get there, we got to be kind of cautious and careful and wait for confirmation. Okay, so ultimately that's what we're looking at there in that regard. Let's touch on a couple of things here. First of all, let's look at some of the previous dates for Fed meetings. I went ahead and quickly drew up some scribbles on the chart based on previous Fed meetings and just essentially what happens. So in most cases, when the Fed meeting occurs, the price action doesn't, it's very volatile in that 24-hour period, but it doesn't take a definitive direction until 2 or 3 days later. So in this sense here, we can see, there's a pretty decent amount of volume, and then of course the price action slowly progresses up day after day from there. Same thing here as well. So if you look at the percent increase from bottom to top, about 28% there. I would say we're roughly at about 30 here. That's another 27%. Then this guy, of course, we lost pretty hard with a dead cat bounce off of 40,000 all the way down to another 28%. So look at this. We're averaging about 28% per run as a result of the Fed meeting. So it either goes up or down by a significant margin shortly after. There's some kind of run that happens. And the main reason why is because leading into it, the market is preparing itself and kind of conditioning itself for that. So in other words, at this point, we can kind of expect the price action to likely increase inevitably, followed by perhaps an initial decrease. And what I mean by that is, of course, if 20,000 can hold, we should expect 28 to 30,000 range get retested again here in the relative near future. So let's just say hypothetically 30% up from where we're at presently, or just say where we could be at 20,000. That put us right around 26,000. Okay, so as a rough estimate, we could be testing the 26 to 30,000 range in the next couple of weeks based on previous market data. Again, no guarantees on that by any means. That's honestly a very large stretch, but it's also fairly relevant in the sense that the market has a tendency of repeating the same behavior. Right now, everything's kind of priced in. We could be essentially at the bottom, and if this is the bottom, then we should only see upside from here. Again, be careful and cautious with what you do. Leverage positions, please position size small or lower. That's what we do as a community, honestly, and it keeps us surviving this bearish market. You don't want to try and go and get wrecked over nothing just because you made a poor decision. Again, cross leverage is also recommended, so it would add to your position without essentially liquidating your open spot. So anyways, that's essentially where we're at there. Let's take a look at some other stuff as well. Big surprise, dollar index is up on the last few hours. In other words, last 12 hours, we're up pretty significant, whereas Bitcoin is down. Big surprise, inverse pairing there. S&P and NASDAQ down 1 to 2%. So again, standard stuff there, but that's likely in preparation for the Fed meeting today and tomorrow. And that does tend to happen pretty consistently. And we can see, Bitcoin dominance kind of essentially drawing dead and kind of going sideways, for lack of better terms, and that is perfectly fine. That's pretty standard. We can kind of see that that's kind of a normal thing. Okay. Again, really just telling us that Bitcoin's price is averaging itself out, and even though all the altcoins are red, there's still enough money going into Bitcoin that the dominance is remaining the same. So anyways, that's not super relevant, honestly. What is relevant, though, to me is staying above the 50-day or below the 50-day simple moving average. That is a point of contention. And at this point, if we look at the larger picture, we can see the price action is still progressing lower. All right, so we're still making lower highs. And I mentioned this to my community as well. That's the most important thing to recognize for the moment. Until we can break above cleanly, there's really no reason to get super excited. Okay, so again, use long positions with extreme caution and prejudice right now, but on the same accord, you could very well, and we should very well, see some type of support at 20,000. So it does feel like 20,000 should get retested. If it does, that'd be a great place to potentially take a long position and have some tight profit targets and have some benefit there. Okay. Between now and then, I would just recommend being very careful because it doesn't look like it wants to slow down anytime soon. So let's take a look here at some key level indicators. First things first, we lost 50 on the RSI. That's a bummer, obviously, because we only spent, about a week worth of trading above 50 on the RSI. Now that we're below that, we can expect that to be a resistance, okay? And what that does for us, that kind of reiterates 21,600 as a key level resistance, because that was, of course, the previous, what was supposed to have worked as a support recently. And it certainly did not. Price came well outside the standard deviation, pushed right through, and didn't even matter, okay? So ultimately, at this point, on RSI under 50, not good. We've also got a MACD divergence here as well, implying we could see further downside because it's starting to pick up momentum. So again, 20,000 is going to be a place in which I'm going to be paying close attention to see what happens at that level. If we can maintain 20,000, then all good. But once again, too early to tell right now. So please, please, please try to have a little patience. I know it seems like, I want to get in before things take off. But again, if things take off, that's great. You can still get in. You may not be at the bottom, but that's fine. But no one ever truly finds the bottom, okay? And I can tell you that it's bottom chasers are losers in this industry. You want to wait for the current to move in the direction that everyone else is heading, and then get in, even if it's for a very short amount of time, okay? Or if, obviously, you don't like that method, dollar cost average, add to your position right now. I put in $20 a day into Bitcoin and Ethereum. It's really simple, straightforward, keeps me from guessing, and helps me average my price down. So, we spend months down here at this level, Bitcoin recovers to 100K, I'll get a nice 5x return, right? Again, there's different schools of thought, but that is probably the best thing you can do right now in this industry, based on the market conditions, is to add Bitcoin and Ethereum to your wallet. More so Bitcoin, but Ethereum, of course, if you have the opportunity. So let's look at the 4 hour and see what's going on. We can see that we're overextended to the downside relatively. And what I say by relatively is just that we're at 30 on the RSI, or just below, kind of peaking below. And in its history, Bitcoin has a tendency of reversing when it hits 30. However, it has, of course, also come down below and stayed below for a good 12 hours. So that being said, if you look at some extreme cases, RSI under 30 doesn't necessarily even matter. Like it can overextend itself tremendously. But on average, for the most part, when you see 30 in the RSI, a recovery is fairly likely to be on the horizon. Okay, so that is positive in the sense that we see an overextension to the downside. We can see we've got a significant decrease in the MACD divergence. And essentially at this point, we're not really getting any signs to take a long position, but it is telling us that we're overextended. It's never a reason to take a position, but it is helpful in letting you know that the end might be near. Okay, so the end of this downtrend might be coming closer. So to me, that's positive because we're coming up on a key level of support, and that could effectively average itself out in this range. So we'll probably see a lot of support at 19.8 or 20,000 if the price were to come back down that low. It does feel like it wants to do that. because once again, we're still making lower highs and lower lows. So I guess the takeaway here on the 4 hour is that it's not great. It's definitely looking terrible, for lack of better terms, and we're at a 6 right now. Just say hypothetically we have another 12 hours of potential downside. It would make sense that we get a candle wick down to 20,000 today based on the Fed meeting occurring. Okay, today and tomorrow, of course, again, a lot of volatility. You could very well see something like that happen. So that's where we're at there in that sense. Ultimately disadvantageous, not really appropriate or ideal, but again, I do feel like a reversal is coming just based on its trend, because I mean, if you look at how well it's just continued to maintain this ascending trend, we're still making higher lows on the daily in the overall sense of things. While it's a very slow process, I mean, it started back in June, we're looking at about almost 2 months worth of just a very slow incline. If we hit 20,000, we should likely be able to see the price action recover, and that'd be a good time to consider a long position. That's just kind of what I'm feeling. I'm leaning more towards 20,000 as a good entry for a long. Again, we'll reevaluate when we get there, because obviously that's not just the reason to take entry, but ultimately at this point, with the overextension on the 4 hour coming closer to a head, that very well could be a point of contention there at 20,000 to maintain this ascending trend and continue upwards. Again, this ascending trend is a lot more recent than the descending trend that we've been seeing, and that carries a lot more weight. So that 50-day simple moving average, we need to respect that until we get above it. All right, so taking a look here at the 1 hour, Ichimoku Cloud, basically just telling us that if you have a short position, you want to keep it open. There's no reason to close it. Well below the cloud, conversion lines below the baseline, and of course, lagging span is free and clear of price action, and it should be for approximately another 12 to 24 hours. So in that sense, if the price just goes straight sideways from here, you'd still want to continue to hold your short position open. So to my community members that got in on the short position 3 days ago, continue to hold. We may actually hit our 5th profit target and take some additional percentage. And that is essentially what we're waiting for right now. It's the reason why I haven't opened any new positions just yet, because that short is still in play. So please understand that, and again, have some patience. Of course, it's important to not just try to overtrade yourself to death. But for now, shorts are winning, and that's essentially the concept. Let's take a quick look at TD Sequential here and see if there's anything else. We got a 9 on TD Sequential recently before we hit another decrease. Got some resets around 3s, 4s, and 5s. So ultimately, not a lot of consistency there. Mostly just these brief periods of consolidation followed by extreme sell-offs. So we can see these sharp increases in volume followed by a consolidation effort at key level supports and resistances. So again, it's consistently inconsistent here in the sense that it keeps approaching specific areas and maintaining itself at that price point, and then inevitably loses it and just gets hammered for a few hours. So today is going to be interesting, tomorrow as well. So just pay attention to that. But the overall summary here is that we're still in a descending market. There's no doubt that the 50-day simple moving average is holding the price action in place, concurrent with this descending trend. We also have a recent descending trend also, of course, is pushing the price action down. So there's no reason for us to expect it to discontinue anytime soon. The only saving grace we have right now is at key level 19,800, which is a previous support level back in 2020, if I recall correctly. Is that November 2020. It's spent about 1 or 2 weeks right there with an ascending type of wedge pattern before it broke out, and that's essentially where our support comes from here, in addition to obviously the most recent relevancy in the sense that we have a strong amount of volume support at that area too. Okay, so you see this here. Let's go ahead and scroll out a little bit. So generally speaking, you can see the most amount of volume accumulation at 21,000 upwards of 21,600. That's where 21,600 should have held as a support, but it didn't. So we lost our volume support, and since we're underneath that level now, we can consider that to be a resistance. So there's a lot more resistance above us than there is below us for the moment. All right, that factors in as well. So again, more likelihood of a downside to 20,000, possibly even further. But let's go ahead and see how 20,000 holds if it were to, and then kind of go from there. Because if we lose this little ascending trend, then I would say it would be short city from 20,000 all the way down to possibly even 14, depending on the overall momentum that we have to the downside. Okay, so again, we cannot rule that out. We still haven't found our bottom yet, and I just want you to recognize that we could see further downside. That's definitely a potential realistic probability, I guess you could say. Is it going to happen? No, we don't know that yet. This could very well be the bottom, but until we retest 20,000, kind of see where we're at there, we're not going to know too much. So that is where we're at. Hopefully that makes sense to you. And I was clear and concise in my description. So if you learned something here today, of course, comment below. If not, that's okay too. Feel free to consider becoming a community member. We've got a lot of new members coming over actually recently to attend the Trading Academy and to also benefit from those signals and the community aspect of things. Because we're all learning and growing together. In fact, we have a roundtable discussion today. Looking forward to that. And what we do is we just basically get together and talk about the current state of the market and strategies, things to help you improve as a trader. But also, I think today, if possible, we're going to watch the Fed meeting live as well. And it's pretty cool experience. All right, well, I hope you have a good rest of your day. Thanks so much for your time. We'll see you in the next one. Take care.